Welcome to another episode of the Weekly Crypto Check-In, recorded on April the 24th, 2025 here. I'm your host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Good. It's good to see you again. I know we've had a little bit of a break.
Yeah.
Hope the last couple of weeks have been good for you.
Yeah, they've been good. And also I guess as a bit of a lead-in, the crypto news has been a little bit slower the last couple of weeks. I think the world is so focused on tariffs right now, or whatever this is supposed to be, that it has been a little bit of a reprieve from constant crypto news, which is, I guess, also appreciated at some level. So,
yeah, there's been a lot of other, I guess, headlines probably that would be drowning out most crypto news anyway at this point. There's been some interesting developments, as we'll get into, but yeah, the focus has been largely on, the back and forth trade war, and obviously the resulting uncertainty around Jerome Powell's future at the Fed, and the market's reaction, and trying to digest it all. So yeah, but nevertheless, some good updates and some things noteworthy to discuss.
Absolutely. Well, let's jump in here. So our first one is one we've been waiting for a while. I mean, obviously, this is something that he was, I believe, nominated by Trump literally like the day or two following Trump's inauguration. But Paul Atkins was finally confirmed by the Senate and was sworn in by Trump, I think is how that process works. But anyway, nonetheless, he is in place. And in his opening remarks, just after he had finished, taking whatever oath he takes, he mentioned that he was looking forward to keeping the politics out of securities laws and provide a firm regulatory framework for the digital assets. I'm like, wow, like I would have never guessed that within the first two sentences, we would be, as an industry, named, which is potentially exciting. We'll see how it unfolds.
Yeah, for sure. I mean, we talked about this for, a number of months as far as what, what would be the, the chapter after Gensler's, enforcement, regulation through enforcement approach, and it does feel, as we discussed back to January, right? Like the momentum around the industry was that we would finally get some legislation, potentially, beginning with stable coins. There's been some interesting developments in the ensuing months, obviously, that have probably taken a lot more attention from Congress and lawmakers around trade and around some of the other economic policies of the Trump administration. But, I think always in the background was the hope or aspiration was, that Atkins would get in, and for this particular area of the mandate would bring, obviously, just a needed clarity.
Yeah.
Yeah.
So, there's so much positive that's happened since Trump's been in office with regards to crypto, and just kind of, I guess, more of the rolling back of the war that happened against the industry. But I believe we're starting to turn the corner where now we can talk about that kind of things less, to talk about like moving forward. You mentioned the stablecoin stuff, and even so, the SEC has been holding these roundtables. I believe this will be their second or third one with certain topics around crypto. And this Friday, now that he's the chair, he'll be speaking at the SEC's roundtable on crypto trading. So, what comes of that? Well, maybe we'll get to talk about it in another episode, or maybe nothing comes of it. But it's, progress may seem slow at some points, but then it comes really quick other times in this industry, it seems. So maybe we're about to turn that corner. So.
Well, I think you said this on a prior recording that sometimes decades happen in a matter of weeks. So it may be that ends up being highly applicable over his first months or year in office.
Yeah. Yep. So I guess the next topic is almost like a blast of the past here. So the Oregon AG, Attorney General, has filed a suit against Coinbase. It speaks as if Gensler wrote this for them and they just launched it. But they're claiming that Coinbase is selling 31 different tokens that are unregistered securities. They even named XRP as one, even though there's a court decision at the federal level saying that that it is not. It just blows my mind. It just seems highly political, and it's just like I feel like we should be moving past this, but we are not. At least at the state level in some of these states, over half the states that had cases against different crypto businesses since the inauguration have dropped them. Oregon going the opposite direction, adding one. I don't know. It seems crazy.
Yeah, a little quacky.
Yes. And it just like, I don't know. I'm kind of mixed feelings, admittedly. Like, I don't want to see this thing happen, but I also feel like this is a little bit of bad debt karma that Coinbase is having to repay. At least as an XRP holder, when they decided to just kind of like abandon that whole part of the market when the initial launch of the lawsuit against Ripple happened, when they didn't have to. And then they came along and said they're fighting for the industry later. I don't know. They seem to be potentially talking out of both sides of their mouth. So not that I want lawsuits to be launched against crypto companies, but maybe if this one's going to happen, at least it should happen to someone like Coinbase. So
yeah.
Anyways,
well, it's going to be there's definitely something that we'll have to pay attention to here. We haven't heard a lot about Coinbase in terms of activity. There's been some M&A. We covered XRP or Ripple acquiring Hidden Road, the prime broker, and the amount of volume that they process and transact on a regular daily basis there on that platform. I kind of just feel like Coinbase is either going to make some type of strategic move. I feel like the M&A environment is not doing. It's not going to be a lot of M&A until I think the market's on more solid footing, because obviously one of the currencies you have is your stock price. So if you decide to use it, but I do think regulatory environment is more favorable for M&A, and I'm just curious to pay attention and watch to see what some of these bigger publicly traded firms in the digital asset crypto space decide to do now that you've got Atkins in place, and now the exception of this case, like you largely feel not that it's smooth sailing, but there's more of an opportunity for them to really be first movers as the space seeks to get more legitimacy in the government and financial and more enterprise arenas during the Trump administration.
Absolutely.
And that's the lead in, my build up, I guess, to this next one, because obviously Schwab is a huge player in the individual brokerage market and the wealth management market, serving as custody for so many of these players. But did you have a final thought on the Oregon AG?
No, just that more of a Coinbase comment, in that it's a I view them more as a acquisition target rather than someone that will be doing the targeting. I think that it's a BlackRock, it's a JP Morgan, someone like that may decide that they want a bit of a head start into the retail side and kind of go that avenue. Because at the end of the day, Coinbase is not all that big of a business from a valuation perspective. So we will see. But yes, our third topic here is the Schwab CEO kind of came out with a comment, I believe at a conference, saying he expected Schwab would be launching spot crypto trading within the next 12 months. I think there's a couple requirements here. A, we need regulation in place or they're not going to touch it. If they do, that would blow my mind. But also, just you would not have guessed even 6 months ago that this comment would be coming out. It just shows how much things have changed. He didn't mention which tokens it would be. It could be 3 tokens. It could be 2. My guess is it's more than that, but not hundreds. It's probably not even 50. And it's in some ways the bigger cap tokens are likely to be the ones that end up on these kind of lists. In some sense, it's the rich get richer, and the smaller cap ones kind of have to, I guess, fight for scraps at a Coinbase or something like that. So.
Yeah, I mean, the thing about Schwab and if you threw in the other big custodian, Fidelity, that serve as kind of the central nervous system for most wealth management firms, in terms of their custody and trading and all the other aspects that you need in order to manage client capital, like individual investor capital, right?
Mhm.
The thing about the thing about Schwab is it's notoriously, been harder and harder, and it's changing, but it's been really hard for if you're an alternative asset manager or you sponsor a private offering, it's been hard to get on their platform, right? They have different requirements, obviously, and you should to be on their platform, but to get a CUSIP and to be in a position where you can be found by advisors who clear custody through them is not easy. And it will be fascinating to see, of the thousands of different tokens, which ones they play with first, or entertain first. I would imagine you're absolutely right. It's going to be the big guys first,
Mhm.
and then all these others are going to be like every other hedge fund, private equity fund, real estate fund, where you want to sell into the fastest growing channel for assets, which is the RIA channel.
Mhm.
But in order to do that, a lot of RIAs, one of the first questions will be, are you on my Schwab platform? Are you on the Fidelity platform? And if you're
Right.
not, then it becomes a little bit, harder. So I don't know that RIAs are rushing out to buy spot crypto,
Right.
but because the ETFs are there. However, it's an evolution, and they obviously are doing this, you'd think, strategically, because Robinhood and some of these other platforms that have gotten very popular with individual investors, particularly younger ones,
Mhm.
um, have been doing this for some time. So, yeah.
What's interesting, I foresee a world where we're not necessarily talking about crypto ETFs, maybe baskets or indexes of some kind, but when it gets down to individual assets, once we have regulations in place, we don't necessarily need an ETF, a wrapper around it, right? You can just go buy the spot asset. If somebody's buying a spot asset, that potentially, if they're curious enough, opens a world where they could use that asset in a DeFi world, right? Then all of a sudden, you don't care about a CUSIP anymore. You can go buy whatever's out on these platforms,
Yeah.
if they do enough research. So, there's money to be made and there's money to be lost in that scenario. And if you're not careful, you're likely to lose it. But it's interesting to kind of see how this things could play out in ways that you're not quite expecting. So
Yeah. And there's going to be a lot more development over the next decade in the infrastructure where illiquid and, let's call it, assets that historically just did not have liquidity, and they were not traded, and you couldn't see them on there was no transparency in pricing. Like, a lot
mhm.
of that is going to move onto the rails, I would think, of using blockchain technology. And there's some big asset managers that are doing offerings. We've talked about a few of them, but they've got their aspirations, I would think, are to be, offering these securities globally, where there's, liquidity 24/7. We talked about the changing of the market hours and one of
Mhm.
the major exchanges. Like, it's just going to move to a highly interconnected world. And I think their biggest concern then is going to be, making sure the system doesn't crack, much less
Right.
collapse, but
100%.
those are bigger, longer term existential threats that
Mhm.
we'll have to, confront over time.
Yep. We will have to, and I think that plays out over years, right? I mean, that's
Yeah,
not something
definitely.
that happens
Yeah,
in the next couple
that's
months.
years, if not decades, yeah, in the making.
Mhm. So moving on here, our next topic, I knew there was a lot of applications out there for crypto ETFs. I would not have guessed it was as high as 72. And this was as of like 3 or 4 days ago. There may be a couple more at this point.
Yeah, it's
Um,
daily now,
It's
almost.
it's
Yeah, there's an
daily, and it's
application.
you almost don't even think any, like, oh, there's another one. Like I I,
Right.
I stopped getting interested. You break them down. The biggest the asset with the most filings is XRP. Some of them are spot, some of them are 2x long, 2x short, all the different things. But it is the one with the most. Solana's got a decent amount, and then even some meme coins. The Trump, the Melania one. Um,
Yep.
the bizarre world we're in, we may see literally a president having his meme coin ETF in place. So
Mhm.
I I don't know how the SEC is going to handle this. Like, are they going to review these one by one? I mean, because if not, well, if they are, there's going to be a deluge of these things. If there's willing to be an issuer for them,
Yeah.
um,
Yep.
I don't know. I think that it's the next couple months. I think will be telling to see how they handle this. Whether they put a framework in place and it makes it easy for them to score these things, or if they're going to have to like read these things line by line and treat each one like they're truly independent. So,
well, so much of the experience I got in the ETF world came from I was with a hedge fund some years ago, and we explored setting up an ETF. The underlying um, securities would be MLPs that were general partners of MLPs, and so you're in the energy space, and you're instead of buying, just the LP, you would be investing in the general partner of the MLP. Anyway, we went pretty far down the road. We secured a ticker, um, and we started, exploring, talking to different providers, and professionals and lawyers. And what we ultimately did not launch, but what I learned through that with this registered process and having to wait on the SEC and getting feedback is I've got to think that a lot of these I got to think a lot of these law firms are like finding themselves in these conversations, because the ETF industry has just grown exponentially, and there's now ways to get very thematic exposures. And if you're a wealth advisor and you want to get very specific exposures, there's actively managed, there's passive, and now this is, I mean, there's probably other ETFs, areas of the ETF market that are growing, but this is certainly a growth area, and all those providers must be just loving this environment in the sense of, it's another application, which means there's been a lot of work that's put in
right.
place. I don't know how much of these will be around in 2 or 3 years if they were to launch, because it's one thing to launch an ETF. It's another thing to get, enough volume and liquidity to actually justify, continuing to run it and pay for it.
Right.
But yeah, there's going to be a lot more proliferation, and obviously the target market for these things depends, right? I mean, there could be wealth advisors or individuals, but also, bigger trades are happening with institutions. So yeah, a lot of applications to watch, and you turn around and a third of the IRS is like laid off or gone. So it's like a reality is, the backlog could be real. Just how many people do you have to process these things?
Yeah, 100%. Yeah.
So
And what I think, and I should have been more clear up front when we started talking about this one, it's not just the spot asset. There's a couple here, maybe 3 or 4, that are index ETFs,
yeah.
right? So,
Mhm.
and I think they actually want to be an index of more than what we currently have ETFs for. So it'd be interesting to see if the SEC allows that to happen, or if they say
Yeah.
it has to be the ones that only have spot ETFs. But I was talking to Casey the other day, and he was saying how the idea that his wealth management firm, like they have client portfolios that have Bitcoin and Ethereum ETFs in it. They have to deal with balancing that, right? They would love to have an index ETF that is market cap weighted and just be done with it.
Yeah.
A lot less
Yeah.
compliant, a lot less rebalancing and just work. So that day's coming. I don't know how soon, but it'll probably be here sometime this year, would be my guess. So.
Yeah, I mean, if you're managing models and you're managing client portfolios and you have 100 clients, let's say, I mean, the last thing you want to do is have to go in one by one and, manage individual portfolios. I mean, there's some of that that still happens. But yeah, I mean, the idea that you can get the exposure that you want for your clients to the space in an efficient, tax efficient, on top of that, vehicle where you get liquidity and you can move in and out, or you can size up and down, is, I think a lot of wealth managers, again, the due diligence, back to the Schwab thing. Are you on Schwab? Is it something I can scale up across my whole portfolio, all my clients, that do want the exposure?
Right.
Those things matter. So lot to come here. But yeah, I mean, you got to think there's a lot of applications that are still even in the works that haven't even been filed.
Yeah. Yep, indeed. So our next topic is more of an educational thing. This is the non-financial side of crypto. I love to see these when these happen, because it seems like the non-financial side of blockchain. Let me be very clear about that. Crypto being a piece of blockchain, but the use of blockchain, I think, can be rather immense over time. And right now, it's all about crypto. So in this case, we're talking about voting records on a blockchain. A New York Assemblyman, Clyde Vinnell, introduced an assembly bill to propose blockchain technology to protect voter records and election results. you're probably not gonna be surprised when I say this. I think this is where it ends up down the road. I don't know if it happens in this particular set of in this year or even the next couple of years, but I think the transparency that comes around a blockchain, and if we truly want to, this is not meant to be political, but it's probably going to come across that way. If we want to have elections that we can believe in, and nobody can point one way or the other, I think blockchain is a way to accomplish that for everybody, whether everyone wants to realize that or not. Right now is probably the challenge.
Yeah, I mean, you got to think Dominion, right? Dominion,
they're not going to be happy about
a
it.
lot of the technology. I gotta wonder, like in their strategy room, are they discussing how they, I don't know, do they adopt the technology, or does it make their company in some sense irrelevant? Are people quote unquote still going to the polls in a traditional sense and waiting on lines out in horrible weather, or what? Because there are people who are going to want answers to all those questions. But
the part that caught me the most off guard with this particular news item was it came from New York, right? Not a state that I figured would be the first mover in this.
Right. You'd think it'd be somewhere maybe like Texas or Alabama or Georgia. Yeah.
California comes to mind because of technology, but not because of so left leaning in the sense of the way that they view elections right now. So I don't know. Times will be interesting the next, call it 5 years with stuff like this, as we start to see other use cases for blockchain besides just the financial side with crypto. So
hopefully they'll start working on the DMV next.
DMV. So like,
love our DMVs, but
I mean, car titles, house deeds, all those things. I mean, I think somebody, I don't know if it's going to be like a LegalZoom.com, but to be able to create contracts between individuals that get put on a blockchain that are self-validating. I think that sounds very techie, but I think it's something that world is here rather quickly, more so than waiting decades for this, something like that. So we'll see. This next one is less of a news item and just more of just an observation, right? The crypto markets, well, first of all, Liberation Day on April the 2nd feels like months ago. We are barely 3 weeks ago. And obviously the equities market has been all over the place, largely down, and just huge moves from their perspective. It seems like just another day in crypto when you look at the moves percentage wise. But if you contrast that with crypto, Bitcoin is up almost 9% since the second. XRP is up 8%. And there's many other tokens that are up. I think Ethereum over that same period of time. Ethereum actually is down 9%. But at the end of the day, it's cool to see this market in some sense holding its own. I think we got beat up so much in March that we kind of were already laying on the floor. We didn't have to be knocked down on April the 2nd. So, but it was great to see that we didn't continue to get beat down as the equity market went down. So.
Yeah, I mean, this is the most volatile month in the equity market since back to 2020, during COVID. So the volatility in the equity markets, and then to some extent, crypto's followed it. Largely did. It felt like in the first quarter, but yeah, it does seem like Bitcoin is held more steady. Gold went on a huge rally over the last month, and everybody said Bitcoin was digital gold. I'm not hearing that so much.
No, you know what you're hearing right now, which is absolute dislike.
All those Bitcoin maxis. I'm just not hearing that narrative.
Yeah, that narrative seemed to gone away. But what they are saying is, Bitcoin is decoupling from gold and the stock market. I'm not quite sure how to process that. Besides, I just think it's crazy. You can't use a 3-week period to define anything. It is way too short. Let's talk about this over months or years, and maybe. But it's because for a while it's Bitcoin's a hedge against inflation. Well, we proved that is not the case. Now we're on the next one. It seems to be that the maxi crowd for Bitcoins is always hunting for something to carry their flag with, rather than just, in my opinion, having utility. But that's that's an opinion for sure. So
yeah. Oh, that one makes me yawn because yeah, you're right. Like it's just, oh gosh, we could spend an hour talking about this, but Yeah, it does feel like there's constantly a search for the next narrative and the quote unquote next use case. But let them have their thoughts. We got one more topic to cover today, and that's that 15 crypto firms with OCC trust charter applications.
Yes. So for those that, I guess, maybe a little getting people up to speed here, the OCC is the Office of the Comptroller of the Currency.
Yep.
And charter applications mean that they can be viewed kind of in a upgraded light, but specifically what most of these applications are after are are looking to get master accounts at the Fed.
Yep.
And that has never happened for crypto. There's been some lawsuits around it that are ongoing about why the Fed won't do it. The Fed claims that it's to protect the financial system because the volatility in crypto. There's all these different reasons. I think it's largely been political up until this point. But what I think what they're really seeking is when they want that master account, that would allow a crypto company, XYZ, that got one of these to not have to use a traditional bank, and they could interact with the crypto world and then still have access to the traditional financial system, but not be dealing with all the politics of a JP Morgan, a Wells Fargo, Bank of America, or whatever you want it to be. So this one is interesting because I think that there's a world here, and I think it's probably more likely than not that it does happen. It may take the rest of this year, but Brian Brooks, when he was in place during Trump's first presidency, started this trying to loosening the rules for crypto to get further in. It didn't get as far as master accounts. A lot of that work got rolled back under the Biden administration, and now that a Brooks protege is in place at the OCC, it looks like they may be able to make some more progress and potentially, get it to the point where they're actually having to force the Fed to make a decision, yes or no, on these kind of things. So
I guess the rules or the framework under which the firms that are going through this application process, they want to avoid, there's a question, do they want to avoid what they call stringent or overburdensome regulations that are associated with other regulated financial institutions?
I don't think it's that as much as it is. I think if not all of these applicants, I don't know the whole list, but I would assume all of these applicants would love regulations for the industry, right? Like they want that kind of clarity, and then they want to be able to interact, to be able to do payments better or whatever their business is
with their customers.
I think they're just trying to cut out a middleman of sorts, and at the end of the day, not just cutting out the middleman, but it's also cutting out the fees of that. It's cutting out the politics of that. It's cutting out just another point of failure potentially. And just,
I was curious if you've seen the rise of private credit and non-bank lending and private debt as an asset class over the last, really since the financial crisis. So over the last 15 to 20 years, and a lot of that has been driven by, the banks retrenching and pulling out due to, regulations and new requirements and capital reserve requirements and all the things that came into place, after we had so many, bank bailouts and the GFC. And I'm just curious if these companies are hoping to get a different sort of regulatory regime where it's regulation, but it's light in a way, so that it doesn't, the same thing that's happened to banks, right? It's prevented them from being able to, they would argue, go out and lend more easily because they got to reserve more dollars for every dollar they lend. And that's allowed these other groups to step in, private credit, private bank, non-bank lenders, private debt funds to step in and fill the void.
Yeah. I think that this goes back to the industry wanting to your point, light touch regulation, much like the internet got in the the late 90s, early 2000s, that allowed it to flourish. And then we could figure out how to properly regulate it versus over-regulating a technology before it has a chance to really, prove its worth. So we're early. We're still very early for that matter. But, regulation will help kind of add a little fuel to the fire for growth. So
Sure.
I think that's a wrap for today. So thanks for joining us on this episode of the Weekly Crypto Check-In. To stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.